So guys, in this video, we're going to look at some of the stocks that are trading below 250 rupees, because a lot of you guys came and told me that Shashank, you're only recommending us very expensive stocks, you're only recommending us high stocks, tell us some stocks that are lower. So I'm going to talk about some stocks that are less than 250 rupees, and if you don't like them, no problem. I'm also going to show you some small cases that you can invest, which are again very affordable and also very good with respect to value. So stay tuned and watch this entire episode. Now the first company that we're going to talk about is Tata Steel. Now Tata Steel is basically a company which has been the backbone of the oldest conglomerate of India for over a century. The company has also been a household name and the critical space in the steel sector as well, right? And that is Tata Steel. Now, over the years, the company has made a lot of acquisitions to expand its operations, right? They acquired Nat Steel in Singapore for 486 million in 2004, Millennium Steel in Thailand for 130 million. Chorus in Netherlands, which was the biggest deal, was approximately $8.1 billion in 2006. Then they also acquired Bhushan Steel for 35,000 crores. And finally, they also acquired Nilachala Ispat Nigam for 12,100 crores. Now, the company basically has a total operating capacity of 19.6 MTPA in India, 12.4 MTPA in Europe, and 2.2 million tons in Southeast Asia, right? Now, the company basically caters to a diverse customer segment. Let's look at the customer segment and where does this actually operate, right? Now, if you look at Tata Steel, they operate in the automotive, construction, industrial, and agriculture space. So they operate in these four different sections, right? Now, if you look at the industry as well, now India has overtaken Japan a few years back to become the second largest steel producer in the world. Now, the crude steel production in India is expected to reach approximately 120 million tons in FY22 due to the high demand both in domestic and in overseas segments, right? Now, the per capita steel consumption in India was at 60 kgs in FY17, and the Ministry of Steel has formulated that the national steel policy that year to increase this number and will reach 160 kgs by FY31. Now, basically, a large majority of the steel production basically in India takes place in Jharkhand, Orissa, Chhattisgarh, and Karnataka. Why? Because they have rich iron ore reserves, which is easy to access to coal, which acts as a power source for the power intensive unit. Now, let's quickly look at the financials of Tata Steel as well. Now, if you look at Tata Steel, there are some few parameters you need to look at, okay? So, the Tata Steel, or basically the steel industry, is a very cyclical business. Cyclical means in some years it will do really well, in some years it will do really poorly, right? So, that is why you see that Tata Steel is kabhi going up, kabhi going down. And if you see, it's a large cap company with 1,34,000 crore market cap right now, right? And if you look at the financials, let's quickly go to the financials and the income statement here. Now, we usually look at yearly basis. So let's do an annual normal view for this, right? And let's look at the last 5 years. So basically, if you see in the last 5 years, the 2016 onwards, actually 2018 onwards, we can see, right? 1,38,000 crores in revenue, 1,59,000, 51,000 in COVID, and 57,000 here, and now 2,46,000, because again, as I said, cyclical, sometimes it does really well and there's a lot of demand for steel. So Tata Steel started doing really well, right? And they're a profitable company. At the end of the day, they still make good net profit, and they also are a very heavy interest dependent company. So they pay a lot of money in interest and depreciation also, right? So all these things you need to also figure out while you're evaluating a particular stock. Now, the main competition of Tata Steel, let's look at some more information here. Now, some of the main competition of Tata Steel is basically JSW Steel, Jindal Steel and Power, and Steel Authority of India. Now, I'm basically going to show you an image to do a peer comparison between them. Now, as you can see this image, right, there's Tata Steel, JSW, Jindal, and SAIL, where you see Tata Steel and JSW almost have the same amount of market cap with respect to INR crores. The price to earnings ratio, Tata Steel is slightly lower than JSW Steel. And if you look at the debt to equity ratio, JSW Steel looks like slightly over leveraged right now at this point. Whereas if you look at ROE and ROCE, if you look at that, JSW Steel looks much better as well. And if you look at the 5-year sales CAGR, again JSW Steel looks really good, and the 1-year return, Tata Steel has done really well. So Tata Steel also has a very strong brand value and a brand recall, which also helps these companies do really well in the future and also get some nice deals as well. Okay, now that was stock number 1. Now the stock number 2 that we're going to discuss, any guesses? It's called Trident Limited. Its products are basically used in millions of households across more than 150 countries across the world. Now, the major part of this company's operations, right, Trident's operation, is in textile. Basically, 84% of the total revenue comes from the textile industry itself. And cotton yarn products contribute to 27%, while home textile, which are mainly led by bath linens, contribute 57% of the company's total revenue, right? Now, the company also makes the same products for different national brands, and some of those national brands are Big Bazaar, D-Mart, Myntra, and even international retail chains like Costco, Walmart, Ralph Lauren, right? Now, if you look at the industry, Now let's understand the industry overview, right? The textile industry is the second largest employment generator in India with 45 million workers. Now the industry also accounts for 7% of industrial output in terms of value and 2% of the GDP, and 12% of the export earnings as well is a part of this, right? Now the Indian textile industry on the other hand is expected to grow at a much faster pace from 80 billion to 190 billion to FY26, and the major direct competitors of Trident are who? Welspun and Indocount industry. Let's look at their financials as well in this picture. Now, as you can see, the market cap of Trident, Welspun and Indocount. Trident is obviously 2.5 times more than Welspun, which is their direct competition right now. Their price to earnings is obviously slightly higher because they are the market leaders, so they're trading at a slightly higher rate, whereas the debt to equity ratio is slightly lower compared to Welspun as well. The return on equity is lower again compared to Welspun, but their operating profit margin is much better than Welspun or Indocount, right? So they're operating at a very, very good margins as well. So again, if you looking at the textile industry and you want to see how this works out, then Trident is a very good player in the space which you can start looking at and trying to do some research on. Now guys, I've shown you some stocks right now. Now if you want to know more and you want to understand more different type of themes that are there, obviously I'm showing you some themes, some market leaders in different segments. You can also look at some nice beautiful small cases, right? Let me show you some small cases that are really good. These are by Windmill Capital, managed by them. One of it is Value and Momentum, which focuses on stocks that are slightly momentum-ish, which also have a lot of value. So Value and Momentum is a really good small case that you can actually look at. Apart from that, something which is my favorite, which is called Growth and Income, right? Now Growth and Income again is a very different mantra that they currently use, and they have been giving good returns and beating the equity small cap index, which is slightly harder to beat as well. So this is again something that is very nice. And finally, another favorite of mine, which is very affordable also, which is called Growth at Fair Price by Windmill Capital, right? Now Growth at Fair Price, basically if you look at it again from a max chart perspective, they have beaten the equity small cap index, and they try to find out companies that are with good valuation, slightly undervalued as well, and they are also good high growth companies, and they keep rebalancing this over time as well. So you can look at all of these things, and if you actually want to buy it and you want to subscribe to it, you can click on the subscribe now button, and once you click on the subscribe now button, it basically opens up a thing, and you can actually put your coupon code. I'm going to show you a coupon code which is there, which is called SUJ15. You can put that, it is an affiliate link, and you get 15% off on your yearly subscription of small case. So you can definitely check out multiple different small cases. There are also some free small cases that you can go check out from Windmill Capital, and if you want to look at all of that, just click on Windmill Capital here and you will see all the different small cases that are currently there, right? So a lot of affordable ones as well, something that you can, if you guys want to buy less than 250 rupees or something that is less than 2000 rupees, there's even equity gold which is at 282, giving good CAGR, and it's a very balanced portfolio. So you can look at all of this. Now let's get back to the episode. Now the third company that we're going to talk about is called IEX. Now I've recently made a video about IEX. It's obviously doing really well. IEX basically has three items on the market for power, right? One is the day ahead market. What is day ahead market? It is basically a physical electricity trading market for deliveries for any, all or some 15-minute time blocks in 24 hours of the next starting day to midnight, right? So basically the prices and quantum of electricity can be traded and are determined through a double-sided closed auction bidding process. That is day ahead market. Next we have term ahead market, TAM, right? Now this provides a range of products allowing the participants to buy, sell electricity on a term basis or for a duration of at least 11 days ahead. And finally we have the real-time settlement, right? So the real-time market. Now it is basically a new market segment with trading commencing on 1st June 2020, right? Now the market features basically a new auction every half an hour with power to be delivered after 4 time blocks or even an hour. So this is the last thing. And now finally, looking deep into the future, which I've covered in the previous video as well, they're going to be trading in energy certificates. Now there are two types of certificates, REC, which is renewable energy certificate, and ESC, which is energy saving certificate. So IEX obviously is doing really well, but let's quickly look at IEX's stock and also look at fundamentals of IEX. Now this is how IEX looks like, right? Now if you see IEX, it actually rallied a lot because it was also the stock market darling in the last in the year approximately around 2020, went up to a high of 243 and then actually came down a lot, and recently they did a split as well. The market cap of this company is approximately 14,673 crores, trades in the power segment. Again, power is also a very cyclical business, so that is why you need to look at it. But if you quickly look at the financials of this company on a yearly basis, you will see that the financials are growing. Basically, the more the volume they get, the better production they do, right? I think that is why IEX is also traded very highly in the space, because also there are few competitions that they don't have. So basically they also have the highest market share in their space right now. And recently there's a new product that has come out in the market called HPX, right, which is Hindustan Power Exchange, which is going to rival IEX now. So all of these small things are happening in this space, but this is also a very interesting stock to look at when you talk about stocks under 250 rupees. Okay, now coming to the last and final stock. Now the fourth stock, the final stock, is called ONGC, which is oil and natural gas. Now basically, did you know that it is the India's largest crude oil and natural gas corporation, which is ONGC, and it basically provides 71% of Indian domestic demand. So basically ONGC was set up in 1955 by the government of India, and the crude oil produced by ONGC is used as a raw material by companies like IOC, which is Indian Oil Corporation, BPCL, Bharat Petroleum, Hindustan Petroleum HPCL, and MRPL, which is Mangalore Refinery. And Mangalore Refinery, by the way, is also a subsidiary of ONGC. Okay, so they basically operate in two spaces. One, they explore and they do production, so exploration and production. Second, they do refining and distribution. Now the MRPL, which is a subsidiary of ONGC, is involved in the process of refining. So it owns 15% of the total Indian refining capacity, which is crazy, right? And by the way, ONGC is not just in India, they have subsidiaries across the world, and it's called ONGC Videsh. Now they have 35 oil and gas assets in 15 different companies. Now let's quickly compare with its closed peers. Let's look at some financial metrics and look at some comparison as well. Now look at this comparison, right? We have ONGC, Oil India, and Indian Oil Corporation. Now if you look at it very closely, right, ONGC is sitting at a massive market cap of 2 lakh crores, whereas IOC and Oil India is trading at a very lower rate. Price to earnings is also higher on ONGC, even though Oil India is slightly higher, but ONGC is trading at a much premium rate right now. And if you look at the profit margin, Oil India is at a crazy profit margin of 31%, whereas these guys are at a profit margin of 14%. But if you also see that Oil and ONGC, right, their return on equity is very low. Why? Because they don't move much and they give a lot of dividends, they give a lot of bonuses, but the stock price doesn't tend to move a lot, right? And again, it is slightly cyclical, so it might not do really well from that perspective as well. So this is something that you can definitely keep in the radar. So guys, these were some of the stocks that we found very interesting under 250 rupees, right? Now, if you want us to do more such themes, or you want me to do something related to a particular sector, like for example, say top 3 stocks in a chemical sector or top 3 stocks in a particular sector, put in the comment section below. I'm desperately looking at your comments as well, and I'll keep checking what is trending, what is not, and what we can actually come and give you as much value as possible, right? This is me, Shashank Udupa, signing off. I hope you guys like this episode, and if you did, click on the like button, share this with your friends, and subscribe. Thank you. See you later. Bye.